This is Morning Stock Watch with the weekly market report for the week ending June 12th, 2020. This report includes the broad market sectors, large movers for this week to include AMD and United Airlines. Starting with the S&P 500 ETF, SPY, weekly closing price of 304.21, down about 5% since last week's close. Looking at the weekly chart of SPY, we can see the chart continues to move in a bullish manner, trading above all moving averages, continuing the bullish trend ever since the lows of March 23rd. For this past week's candle, we have a very strong gap down candle from the retest of 323, which is the open price of the large red candle here. This week is not quite a bearish engulfing candle, but it does have a large gap from the highs at 323 down to the lows of 298.60 and closed just a hair above last week. Attention to the breakdown candle and what current price is doing. The candle's closing price is around 296. Price managed to break back up into the breakdown candle area, as we can see here, with some pretty nice upside off the $300 support level. Negative divergence between price and volume has been continuing uninterrupted, as we can see right here. Price is going higher as volume continues lower. This shows that price has worked its way to 323 before a considerable move down. This week gives a big hint of a possible change in price behavior after a solid test of 323. This week we have higher than the recent average volume with a pretty large red candle. This volume shows many traders were interested in getting out at 323 to sell, and that this is a valid bearish candle, meaning in the future we're likely to see lower prices. On the indicators, there are no apparent divergences on the weekly chart. On the daily chart, an ascending wedge pattern, which is normally bearish when getting near or reaching a particular number, and with negative divergence on your favorite indicator. Again, we can see this number was in fact 323. Last Friday, we had high volume shooting star candle at the top of a bullish trend with negative divergence between price and volume. This gave us a clue to a possible correction after hitting 323 along with the emergence of bearish continuation. Friday, we have high volume hammer candle bought up from the lows of 298. There is a large cluster of moving averages just below the $300 price level that represents a lot of support, so a gap down on Monday doesn't look likely. Looking at the 11 market sector ETFs, simply looking at the weekly candles in comparison with the S&P, this week financials led the market lower, down 8.5% to support at $24, along with energy and industrials down to recent support. They're also the sectors with the largest volume and largest losses this week, so it had a very large influence on this week's market price action. Tech almost unfazed, but with a spinning top and high volume. With that look, we can definitely expect another red day in tech before it goes higher, while the rest of the market chops around for a bit before deciding its next direction. Now let's look a bit closer and see where the S&P could actually be going. As always, there's two sides to every trade. The idea is to be on the good side of the trade more times than not. Again, on the weekly chart, we have a large bearish candle, but it just misses being an engulfing candle. Price closed above last week, as well as all of the moving averages. The high volume on the candle shows that it's probably a legitimate reversal candle, but without engulfing last week's candle and leaving all the moving averages intact. It looks like we may have some consolidation in this area before the next move, whichever way that may be, looks most likely to the downside. On the hourly chart, of course, visually this looks very bearish, but we have some bullish divergence building up again here at $300 support. These lines here and these lines here. Again, the overall direction of price at this point looks like it wants downside, but in the very near term, we may see some chop with price back up around the bottom of this head and shoulders pattern, around 318 or so. Come back down to the lows for a retest or a break, likely to form some kind of wedge before making anything above 323 or lower than 295. With this known, we understand that price can leave the wedge early at any time. Next we have is AMD, weekly close of $53.50, up about 1% since last week. A pretty wild looking high volume doji candle. Sold off strong from the upper wedge and closed near its opening price near the lower wedge. The wedge appears to be pointing at the $60 price level with bearish divergence on volume, RSI, and MACD, along with the emergence of a bearish crossover on MACD. The gappy candles shown here will be areas price is likely to revisit. Let's see this on the daily chart. On the daily chart, things look slightly more bullish. Instead of the bearish wedge, things look more like a flat top ascending triangle, which are usually bullish at the top of a trend. The divergences no longer apply on this chart. So the daily chart is bullish while the weekly chart looks bearish. This leads me to think that maybe there are some higher prices. Maybe price can obtain $60 or more before making lower prices. Downside numbers at $40 and $50 are these consolidation areas shown here. And lastly, we have United Airlines. Weekly close $39.66, down almost 7% this week. United Airlines traded the highest amount of volume of large cap stocks over $25 this week as the economy continues to reopen. On the weekly chart, it looks like the brakes have been put on United Airlines around the $50 mark. We have very high volume on the last 2 weeks with highs around $48. From the looks of it, there may be another attempt to break to the upside. On the 2-hour chart, we have an instance of bullish continuation. Bullish continuation is different than bullish divergence in that it shows that price may continue in the up direction instead of reversing price action from bearish to bullish. Also, we have somewhat of a symmetrical wedge where the lower wedge is the bullish continuation, with price already appearing to break above this upper wedge. I'm definitely looking for something around $44 for the next wave, and maybe another attempt at something above $50. Downside support at $36, $34.50, and $32. If any of the targets are reached, then another study will be needed to determine the next price move. If you found this report useful in any way, please give a like and subscribe. Thanks for watching, and hope to see you again next week for another weekly report.